Today is Sunday, tomorrow is Monday, so that means it is time for a price prediction video for AMC stock. Last Sunday, the price prediction video was on point, spot on. So let's try to keep that same level of accuracy. It's not financial advice. It's never a guarantee. It's simply what the data is telling me that I can relay back to you guys. Now, almost equally as important as the price prediction segment of this video, we have a lot of breaking news that is coming out. We also have very, very important data points and catalysts for this week that we absolutely must talk about, not only because it'll affect AMC, it'll affect the broad markets and some other trades that you guys are also invested in. So we're going to dive into all of this information. I do apologize ahead of time if this video is a little bit on the long side. There is just a lot we got to cover, and I do highly recommend you guys stay and watch the whole video, because how do you know how to make an accurate decision if you don't know all the information? It's kind of a necessity. So let's get into it. Hit the like button, subscribe to the channel, do what you guys got to do in that regard. Also, if you guys want to come join the private trading group, link down below in the pinned comment to do so for that one. Whether you are experienced in trading options, spreads, or anything else, any other strategy, we cover it all. Or if you're a beginner and you want to learn these things and you want to have people to talk to, myself included, that will answer your direct questions, that is the place to be. Now, let's get into exactly what is going on. Let's first off start with the breaking news, because we really can't go over a price prediction for AMC if you don't know what's going on around the world, what's going to affect the markets. And I'll tell you guys right now, if you have not noticed, the markets are very, very sensitive to Russia, Ukraine, as well as geopolitical tensions, even more so right now, because we don't really have the Fed, the next FOMC meeting, until May 4th. So there's a lot of time. There's over a month until the next Fed meeting, and there's a lot of time to see things evolve. So you're definitely seeing a precedent coming from these international headlines, let's call it that. Now, it says North Korea warns Seoul of serious threat over missile remark. The influencer sister of North Korean leader Kim Jong-un called South Korea's defense minister a scum-like guy for talking about preemptive strikes on the North, warning Sunday that the South may face a serious threat. So not good in that regard. Not good. I don't know if the markets will directly trade off of that. I don't know if there's going to be fear based off of that, but you gotta add it in here when we're talking about the breaking news that is coming out, because that is not a good thing. But the main key of breaking news is really Russia and Ukraine, as well as what Fed Williams just said. So New York Fed Chair Williams says Ukraine war could aggravate inflation. The Federal Reserve could start trimming its balance sheet as soon as next month, guys. Not good. Balance sheet and reducing the balance sheet, no bueno. Whenever you hear that, think no good. Markets not gonna like that. That's what you need to know, because during 2019, that was really the only time we ever decreased the balance sheet in a somewhat meaningful way, only a couple $100 billion, right? And look what happened in the markets in 2019 because of us reducing that money off the balance sheet. It was a very rocky year overall, but look what you see in 2018, 2019 crash. That was right here. The markets took a sharp move to the downside. So that's going to be a big thing that I think markets will actually pay a lot of attention to. Now, let's read this because it's very short and it provides you a lot of context to why this potentially could affect the markets. So it says, the Federal Reserve could start trimming its balance sheet as soon as next month, New York Fed Chair John Williams said on Saturday during an event hosted by Princeton University, Reuters reported. Inflation at 6.5% is currently the central bank's greatest challenge, Williams said. He said it could be driven higher by factors including the pandemic, war in Ukraine, and labor and supply shortages. Quote, uncertainty about the economic outlook remains extraordinarily high, and risks to the inflation outlook are particularly acute, Williams said. Still, Williams expects rates increases and balance sheet reduction should help bring inflation to about 4% this year. Those actions should enable us to manage the proverbial soft landing in a way that maintains a sustained strong economy and labor market, Williams said. Both are well positioned to withstand tighter monetary policy. So that's going to be, I think, a big thing the markets react to. Anytime you see a Fed voting member coming out and saying they're going to start selling off their balance sheet, like, it's not a good thing. Let me put that into perspective. You've never seen the Fed substantially decrease their balance sheet in the way that they are going to. Like I said, we will go ahead and pull this up for you guys right now. Let's do the Fed balance sheet. Bear with me for 1 second. I look at this all the time because I like to pay attention to exactly what's going on. So I could tell you this off the top of my hand, but just in case you guys want a visual reference here, right, from 2007 up until the Fed started to just print massive amounts of money, the balance sheet was only about $880 billion, roughly. Very, very small. Now it's sitting at $9 trillion, so it's 10x since 2008. But what happened in here? 2018, 2019, when this crash happened in the markets, well, the balance sheet actually started to come down from about $4.5 trillion down to the lowest point at about $3.75 trillion. So not even a big move down, and the markets took about a 25% nosedive. Was not a good situation. Well, look at the balance sheet now. If the Fed wants to bring the balance sheet back down to even close to the levels where we were at last time, the markets don't know what that will bring. And as history has showed us, 2018, 2019 was not a good reaction. So if you're thinking about bringing the balance sheet back down to maybe $6 trillion or $5.5 trillion, that's a big drop. What's that going to do for the markets? Because the Fed really helps to and manages the shorter end of the curve. So if you start to see the Fed selling out assets or letting them run off or doing both, you're going to make interest rates go way up and you're going to restrict capital in a very substantial amount. But the markets don't know exactly what to expect. The markets are used to rate hike increases. So we know exactly what will happen if the Fed raises rates 0.25% or 0.5% at any given meeting, or if they raise them 10 times in a year. We know what to expect. We know what the cost of capital will be. We don't know what will happen when the Fed does start to massively reduce its balance sheet. That's why every time you hear the Fed say anything about the balance sheet, the markets do sell off. So keep that in mind. That is hawkishness that we have not heard yet. Reducing the balance sheet as soon as next month, we have not heard that yet. And it sounds like he's saying they're going to try and sell these assets. Nonetheless, we do have some positive news out of Russia and Ukraine. Let's go ahead to this up here. It says Ukraine says it has regained control of Kyiv for the first time since the start of the Russian invasion. And it also says Zelensky and UK Prime Minister Boris Johnson, discusses war peace negotiations. And there wasn't anything too crazy, but Zelensky said that he does welcome Boris Johnson being in on these negotiations. So it looks like we're heading into the right direction as far as that is concerned. And it's really going to be a potential good catalyst versus the Fed, because Russia, Ukraine, that war will end, and that will be a huge uncertainty taken off the backs of the markets. And if you guys watch this channel, if you stay up to date with all of this information, you know the only thing the markets hate more than bad news is uncertainty. Russia invading Ukraine, possibly using chemical weapons or a nuclear attack, or getting NATO involved, possibly World War III. I don't think there could be more uncertainty unless there was like an alien invasion or another Ebola type pandemic, right? And that doesn't look very likely, God willing, knock on wood here. Hopefully that is wood. But nonetheless, it's huge. So once that ends, that's going to be bullish. But if the Fed is now reducing the balance sheet, and we know what happened in the markets in 2019, that's not going to be a good thing. Now, why do I bring up these two talking points here in this video? Because this could come to a negotiation possibly this week. I don't know. I'm not a fortune teller. But what I do know is that we get the Fed minutes on Wednesday. So what is that going to do for the markets? Is it? Yeah, it's Wednesday. Fed minutes should come out at about 2 p.m., I do believe. What is this? FOMC meeting minutes. This is from the last meeting, basically the readout of what was actually said. So you might get more details on what the Fed kind of expects to do at the next meeting, more clarity, because it's them essentially talking to each other. We get the readout of that, like when Putin, or not Putin, but Biden talks to Zelensky or China. You get those readouts and we know what was said for the most part. That's kind of what this is. And you're going to get a lot more clarity. Are we going to get that 0.5% rate hike, or is it only going to be a 0.25% rate hike? As of right now, the markets are firmly pricing in a 0.5% rate hike by about 69.4% probability, only about 30.6% probability of a 0.25% rate hike. I don't really think the markets are fully pricing this in because they haven't reacted to this at all. The markets have went up as the expectations for the Fed raising rates has gotten more aggressive and more hawkish. So I do think the closer we get to this meeting, May 4th, which is obviously 4 weeks, 3 days, 13 hours, 47 minutes away, you're going to see this fear start to kick up a lot more, especially if you do have a lot more talks about reducing the balance sheet, especially on the FOMC meeting minutes. So as well as that, on Thursday, surprisingly or not really, you do have continuing jobless claims. That's going to be pretty important. Initial jobless claims as well. But then you do have a lot of Fed speakers that come out. Fed Bullard speaks on Thursday. Fed President Evans speaks. Fed Bostic speaks. Fed Williams speaks. All of these Fed speakers, they might drop some bombs on us. And anything with the balance sheet, that's going to be kind of new information. We know they're going to reduce the balance sheet, but we're not quite sure. They even said they're not quite sure how they plan to do that at the last FOMC meeting, and that's why the markets really did rally. There was no Fed balance sheet runoff or selling of assets that was actually announced. So that's going to be the main thing. Raising rates, it seems like the markets are pretty comfortable with that, so I wouldn't bag on the markets crashing just because of that. But the balance sheet, pay attention to that. The only thing that really matters here. Now, why do I bring up all of this before we even talk about AMC data or technicals or anything else, a price prediction? Well, it's because it's going to move AMC stock. It's going to move the broad markets. Whatever these Fed speakers say, whatever happens in Russia, Ukraine, whatever happens with the FOMC minutes, it's going to move the markets a lot. And that's going to affect AMC, whether it is positively or negatively. And it looks like this week, might set up with a lot of uncertainty and potential fear. So I would be very mindful of that. But really the fear, the catalyst don't start until Wednesday. So I think on Monday or Tuesday, it is likely that you will see a decent size bounce to the upside. Now, probably, one red day, one green day. Really hard to tell, but you're going to get a lot of back and forth when it does come to AMC stock. And I wouldn't be surprised if Monday we do bounce up to $25, $26, come back down to, $25, $25 right here. Where this line is drawn, and then make that move to the upside. Believe it or not, the more hawkish the Fed actually is, the better it could be for AMC stock, because the more the Fed raises rates, the more the Fed reduces the balance sheet and starts to sell assets, it makes it harder and more expensive for shorts to hold on to these short positions that cost a lot of money. The cost of borrow rates have went up across the board. With AMC stocks specifically and a lot of these other retail stocks, the cost of borrow rates can go insane on a very short notice. And every time the Fed raises rates or reduces the balance sheet, the margin rates actually go up just to have margin debt in your portfolio. So a lot of different factors that are working against the hedge funds when it comes down to the Fed, what they're trying to do here. So just keep all of that in mind. It's not necessarily instantly going to translate into a bullish thing for AMC. It might take a little bit of time for the markets to finally realize. The markets sometimes can be pretty slow realizing what's going on around them. I've been calling out a recession for the past 6 months, and what's everybody talking about now? A goddamn recession. So let's talk about exactly what I expect by the end of the week. Now, this trend line right here, we found a lot of support. We did close slightly under that at about $23.30 per share, down about 32 cents here in after hours. So $22, 98 cents per share. We're still very close to this level. And as long as we stay above $21 per share, I think we're going to be good. Now, I want to set another range here. I do think it's going to be bullish, and I do think we will make a move to the upside, but I don't know exactly how high we are likely to go. And I don't know if AMC is going to announce some surprise catalyst that would send us up much higher than that. But I would expect the range to really be in between about $26 per share and about $30 per share. I do think you will see a couple dollar move to the upside at the bare minimum, just based in part. Like, look at the move we have seen. All of these green candles, 160% gain from about $13 per share all the way up to about $34 per share. And we've had a lot of consecutive red days here, guys. Just take it in for a second. Down 5.44% Friday. On Thursday, down 4.05%. On Wednesday, down 12.77%. So we've given back, I should say, some of those gains that we have seen. Almost all of this 45% positive day that we did have. So inevitably, stocks don't just go up. They don't just go down. You're likely to see a bounce, and I think that's pretty much common sense here. How high or how explosive, that's the real question here that I simply cannot answer, but I do think in between $26 and $30 per share is a very reasonable price target by the end of this week. Anything can happen. We could have a really bad catalyst come out, really bad news come out, or we could have great news that comes out and we could go much higher than that. So that's really my baseline expectation. If we go higher than that, obviously I'm happy with that. If we come down and shorts have not covered, then nothing has changed. I mean, AMC still has the same core values of AMC. Why we like this trade, everybody knows about it. There's FOMO that is basically like a hose for a spigot, right? Or your sink. It's like it's closed 1 second, and then when it opens up, it just flows through, right? There's no lag between there. That's exactly how you could imagine the momentum with AMC. It's still in there. The water is still in the pipe. The momentum is still there, but it has to be opened, and then it can be closed. And I don't know if that analogy made some sense with you guys. It makes perfect sense to me, but you have that big aspect there, and as long as the shorts have not covered, the trade is still very much intact, and it's even better because the business has been getting better. So it's like your worst case scenario keeps getting pushed up a little bit more. Now, let's talk about the option activity for Friday as well. And last week in general, we seen 733 orders totaling $944.8 million. Positive order value of 75%. And a lot of this activity is for the April 1st expiration, as well as the April 8th expiration and the April 14th expiration. So it looks like a lot of institutions are bullish on the next couple of weeks for AMC's stock. Now, on top of that, just on Friday alone, you did see 33 orders totaling $15.01 million. Positive order value of 55%. Now, as far as the short interest, you're looking at 20.7%. So it's actually went up. Shorts have not covered at all. To see that big rally, shorts have not covered. I think that is a very, very positive sign overall. We are looking at shares that are currently sold short of 106.68 million. Cost to borrow max of 5.84%. And the utilization of 100%, as well as days cover sitting at 2.44. And as far as the max pain, run through this data just briefly. For April 8th, that will be this Friday. Max pain is sitting at $22 per share. Now, I'm not a fortune teller here. I don't know if that's what is going to happen. Doesn't look like the data does support that. If we do come down to 22, I would expect a lot more pain and volatility in the markets as well. So be very vigilant of that. If you're going to lose on AMC, maybe you want to hedge out your position using, puts or spreads or verticals or butterflies or anything else really. And, not a recommendation there, just a simple thought. Now, nonetheless, if you guys want to come join the trading community, come ask all of your questions, get the insights to what I'm doing with my personal portfolio. We called out the Facebook put, Snapchat calls. Last earnings season was incredible. Couple $100 into tens of thousands of dollars on single trade. So if you guys want to be a part of that, link down below in the pinned comment. Probably not going to keep it open for too much longer, or we might just do like a one set price, lifetime access. Not exactly sure how that's going to go. So if you guys want in for a cheaper price, check that out here in the next couple of days. Like the video, subscribe to the channel, get your free stocks down below in the description as well. Thank you guys for watching, and I will see you in the next one.